Hello guys, glad to have you on board again today. I'm sorry, but I'm gonna have to make this one a little bit quicker, so I'm gonna try sticking to the essentials. So first of all, about cryptos, the week is pretty much balanced. It's goddamn hard to figure out what the hell is gonna happen for the week to come. So let's just embrace the three possible scenarios, and let's be honest, to me, it's really absolutely not possible to give you a scenario to put ahead of others too. So either we stick into the previous week's range, which means we don't even break the both lows and highs, and it would just basically say we're in another momentum contraction, so another volatility contraction. If volumes are pulling down as well, so let's, all right, first option, so like I said, we don't close outside of boundaries. We close into previous week's highs and lows, and volume is dropping below 20-day average. If that's if such thing happens, then it means eventually a partial profit taking can be done out of Ethereum's for low risk profiles. Otherwise, I suggest you just let it go. Same thing goes for Bitcoin, but obviously in here the price area is narrow, so in here I don't even suggest it is possible not to break highs and lows. So in here we're probably going to break one or even breaking two. We can break both highs and lows. That could be an option, but any fucking way, I think we need information, and I've got nothing to trade. So having no information, what I would say in here is that the cycle's bullish, so I see no reasons to sell what you've been buying, most likely because we've been buying at interesting prices, prices have been rising, so you're safe right now. So as the entry price is safe, just put the goddamn stop loss at the entry price and let it go. The cycle is with you. That doesn't mean a black swan can't show up and fuck it up. But so far, speculating on this doesn't make sense. It means you think something is going to happen, nothing suggests it's going to happen, but you think so strong that you're going to have to press a button. That's not what I teach you guys. So please, patience and rational decision-making process. So far, there's nothing suggesting we're going down. No matter how hard I can try to find that, all I see in here is that, oh man, the resistant context is just so far. That's the 50% line is just in there. I mean, it's probably $270. So I would say saying any fucking thing and selling before even reaching there is not even making sense. If you just delete prices in here, you can clearly see the first burst in here, and just look at all the technicals. All right, just delete the prices, because price can lead you to so much bad decision making. Alright, so let's be honest. This is a crashing structure, definitely is. You can clearly see the first steps. Alright, first with creating the mature range in here. We've been selling that range in here. You can see the acceleration down in here. We've been contracting in here, pushing down 2 times. I think now we're over. Alright, that's the first time in here that we broke with a higher low. That's the first time in here we've done. As you can see, we also have this suggesting fucking daily chart. We're not intraday in here. This is mature range. So once again, what do when you see those 2 square signals, one after each other, one at the bottom, one at the top? Means you know that your range structure is available to visibly trade. So what you do is you take the lowest closes, oh shit, and the highest closes. All right. And now what do we fucking do? I mean, it is just bright to me, or it is crystal clear to me. In a speculative perspective, if you do trade this area, I goddamn don't understand you. So the thing is that what we have in here is this. We're just rejecting the previous lows because obviously the bears are fighting back. They definitely have to. So is this a fake breakout? Yes, it can be, but it is very less likely going to be. Everything in here suggests we've been getting out of this range, this mature range. We've been closing multiple times on top of this thing. We're just testing this previous low, which is just a technical level, but every fucking thing suggests there is higher valuations to reach out to, and the minimum is just to rise this. And as we did build higher lows, all right, it is not a double bottom structure that we have in here. I strongly suggest that what we have is this channel, and generally we do break them up. So I suggest still the minimum is 240 bucks for a Ethereum, and I still tend to believe that reaching out those levels, we're probably going to push up to 14.6%, which is $280 as a maximum target to me for speculative trades. So if you have the luxury to have this entry price, and normally you have if you followed me, then why the hell would you change the plan? You put the stop at break even and you wait. We've got two options in here. Either this was a fake breakout and we're going to work this area, go negative and accelerate to the downside, take down your stop loss and make lower lows. That's possible. Obviously, everything's always possible. But in a technical fucking perspective, we've been breaking 50% of this range. Normally, we get to the 50 top percent, and this is at least 240 bucks. I think and I think this is what you need to analyze. I think Bitcoins instead are driven by some other perspectives, not speculative perspective. Let's be honest, what we have in here with the Bitcoins is more like a stored values. It means in here the alt season has been bringing some valuations and people are putting back the gains in Bitcoins and therefore rising the market valuations in Bitcoin. So there are multiple factors driving the Bitcoins to the upside, but still I think in a speculative perspective, even if Ethereums are lagging, I think this is where the speculation shows up. This is where the speculators are waiting for some bright things to come. What I care about is not how much time it takes. And even if we were about to just do the final move in just a few hours for the Ethereum, I think there's much more money to make out there in a speculative perspective. Obviously, if you're buy and holding, once again, I stand for this. What the fuck are you doing here? You shouldn't even care about anything that happens right now if you're buy and holding. We're just early stepping up to try reversing the crashing structure. It's still very immature at the moment. It's still very hard to say if we're not going to make a lower low afterwards, because any bad news can show up out of nowhere for no reasons, some kind of black swan. But still, do you trade just because you think a black swan could eventually show up? No, you don't. All right? So now moving out to other assets, and I just said it, so I'm just going to repeat it. Why the fuck don't you just remain a seller out of the US? Because that's the exact same thing. I think a black swan will show up for the US because regarding the risk they take, it's just what they deserve. But do I trade? No. No, I don't. No, I don't trade because I think a black swan will show up for the US. Because first of all, I don't know what the goddamn black swan could be. That's the point of a black swan. And secondly, what I care about is just to manage my goddamn risk. I tried so hard to just not be put it down in here, and I think I've done probably out of every fellow speculators and guys talking about what they trade, I think I'm the last one who's been standing bearish. So others have been surrendering earlier, some have been surrendering long ago. I was probably among the latest ones. So I tried anything I could. I tried hard, but it didn't work out. So what I done is that I had to trigger that loss taking. I had absolutely no other choices. The thing is that right now, what's going to happen? I goddamn don't know. I just think anything can just fall apart in just a clap, because all we have in here is just low volume, the lowest volume we've ever had out of SPX. So the volumes are dropping. We're rising for very bad reasons. We're expecting a negative earnings season, so negative expectations, but still we're 10% higher than a year ago. So there's something definitely wrong in here, but who cares? I mean, we're just here to print prices and not value. So that's exactly what the problem is. When we're printing prices and not value, this is where the worst can happen, because any bad news can have rippling effects and systematic problems. So now we're going to have a look at the broader picture in here, just to try highlighting interesting areas in which things to be seems to be a lot more rational than the actual stock market. Because in here, let's be honest, I have no other words to call that but a bubble. It is definitely it. The thing is that some people will say we have no bubble because everything is just equally weighted in the US indices. We've got no one just taking the lead like we did back in the 2000 bubble or anything like that. Now, All right, let me tell you how deeply wrong you are. First of all, this is what some people call the everything bubble, which means the bubble is actually stock market itself, and it is not just stock market. It is U.S. stock market that is a bubble. That's the big problem, and pure and simply, let's just show that as a broad picture. All right. Now we're going to see this one right after. Yeah, just have a look at broad indices, all right? Let's take a look at the monthly charts, and you'll see what I mean. I mean, who's bubblish in here? Just look at that. I mean, who's great? Who's so great? Just look at that. I mean, to me, it speaks for itself. Just look at the world chart. The world chart is mostly U.S. sector because you guys are so rich. This is where all the money comes from. You guys have the strongest economy. Yes, but things are about to change because nowadays you guys have some serious shit to work with. Which I'm just going to give you 3 things, okay? 3 things showing up that if you think yours are the strongest and they're going to keep on having the leadership, then let me just tell you 3 stuffs. Tax plan, credit negative, T-bonds holded mostly by Chinese, and sorry, so the first one is just so credit negative dollar because of tax plan is the first thing. Second thing, most of the T-bonds holded by the Chinese government, and that's no good news for the U.S. All right, especially not when they're negotiating boldly with the Chinese, just putting their balls on the table and saying, okay, you know what, if you're not happy, I'm putting tariffs. That's not how you negotiate with Chinese, especially not when they hold your own balls by having so much of your T-bonds. And secondly, when they're buying shit tons of gold, so you won't even be able to pay any fucking dollar. The thing in here is that they hold your balls. You're putting them on the tables, and you're doing anything you can to just bend them. Let's make it right in here. Let's put it straightforward. If you think you're going to bend the Chinese, problem. So the thing is that that's the problem with Americans. I got them like the American way of life. I got them like the Americans themselves. But they have one problem. They're stubborn. Not all Americans. I'm not putting you guys all in the same bag. This is not how it works. I'm talking about macro structures of psychological behaviors. I mean, the Americans think they're first because that's how they are. They always think they're first. This is why they've been electing that goddamn orange president. So America first definitely is great. So they're negotiating like that, so they're putting their balls on the table and thinking that by putting tariffs on Chinese, they're going to ban. This is not how it works, because first of all, and the third pillar, so like I said, credit negative for the dollar. Most bonds, and long-term bonds, that's the problem. If they were just holding short-term bonds, that wouldn't be a big deal, but they're holding 10-year yields. So they have T-bills, and a lot of them. And the third pillar, which is nonetheless, is the negative trade balance. Now put it all together. How do you even think that story is going to end well for the U.S.? It's not. Anything like in this is good. All of this is just, you better hope it is not going to be all together, because for now it's fine. You do have strong dollar that compensate for the negative trade balance, which means that's fine. You're not losing capital. The capital is just moving from one way to another, from one sector to another. So things are moving around, but you're not losing capital, which is great. All right? But the problem is, as you hold the 3 things together, you better hope they're not going to trigger all together. And the problem is, you're fighting at Chinese, trying to make them do something they don't want to do, and they have the power to take you down. Now we're going to add a 4th pillar in here that's a goddamn dangerous one. It's not a pillar, but it's what I call timing. The difference is Trump is an asshole about timing. He thinks he's doing great, but like the tax plan, it's the worst ever timing to just put this thing in place. This is what we call, you put this thing in place right after a recession, so you get the benefits of this all throughout the economic cycle. So you make sure that you're gonna be able to pay for it. You don't just weaken your goddamn dollar by putting it at the end of an economic cycle, thinking that you can break them. Because Trump doesn't think about economics as something that moves forward and backward. It just thinks, all right, we're moving forward, so if someone is trying to put us backward, then we're going to nail him and we're going to move forward. That's exactly how he thinks. That's exactly what has been done. What he's been doing so far. He's been thinking that the US can avoid recession by just putting others down. We live in a fucking globalized world, so open your eyes. If you put someone else's down, it's going to put you down as well. So that's exactly how it works. The thing is that you think Chinese is responsible. They're not. It is way more complicated than that. So the thing is, we have multilateral world right now, and you think that just putting the Chinese down is going to make the US stronger. Yes, it's been working for a few quarters, but it is a longer picture. And like I said, credit negative dollar, T-bills under huge problems of volatility if the Chinese ever decide to put you down. And if you just piss them off, they might be just retaliating at some point. And the third thing, like I said, you've got a negative trade balance. And no matter how hard Trump tried to reverse that, it's still in place, and worse, it's even increasing at the moment. So right now, it is not good. It isn't good. It means you do have capital, but you're losing this capital into other currencies, and hopefully the dollar is compensating at the moment. But if dollar was about to go down, it's even more capital that's going to bleed out of the US and at a faster pace. And the problem is, if in the meantime the Chinese decide to sell the T-bills, then you're fucked. And I have no other ways to say that but this, you're really, really fucked. Because if you have negative dollar, I mean losing dollar in a trend, and I stand on this, just go in here, what the hell is that? No. All right, we'll see this one right after. But what we're going to do is, yes, we're going to load the major other sectors. All right? So just have a look at the broad picture in here. The thing is that we're going to put the DXY. Normally it's supposed to be there. BUND, T-bills, VIX, and what is that? Tesla? What the fuck? Don't give a shit about Tesla. Let's put the goddamn DXY. Ah. Okay, I'm going to put a label on this one. Alright. So the dollar index. And now you're going to have a broader picture of what this is about. Because, once again, if you trade short term, I really understand you buying US stocks and everything like that. I mean, play the music as long as it plays. In here, my job is not to do this. I'm not doing intraday trades. All I'm doing in here is looking at the next swing trade. And I think the next swing trade is not in favor of the US. Most likely the opposite. So just look at that, all right? The WTI has been pulled back in firmly, but the worst is to come. So yes, it is not going to be good for US, which means another set of problems, because anytime we drop below 55, most of your fracking oil companies are just losing a shit ton of money, and they're freaking in debt. So most of the, not most, but a big amount of debt is set into this sector. So if oil is going down, problems for the US, straightforward, all right? The fracking thing is not going to work out. The problem is gold is hesitating right now when US is doing anything they can to just push it down. But let's be honest, who's having the biggest amount of gold nowadays? It's not the US, it's the Chinese. So the Chinese are making the gold prices. And if the dollar falls, then you might be running for you might be running for gold, which means US citizens themselves could just be fucking up their own thing. Which means if they ever wants to buy the gold, I mean the physical gold, they're going to have to buy it to Chinese. And guess what's going to be changing the game? The price of gold, which means they're going to ask for shit tons of dollars if you want to buy that. Which means they own the safe havens. They own your risky assets. They have everything to put you down, and still you think you have it under control. That's what I think the most beautiful part of this game is that the game is already set. The game is already settled. The Chinese will win. It's just a matter of time. But I see the goddamn Trump trying to do anything it can to fight that. That's just beautiful, because I see the picture and I'm just astonished by the way Trump is playing this game, because he's trying. At least we cannot. I owe him this. He's trying, but he's already been losing, and the tax plan is actually the worst thing he should have done. But as this guy is just a narcissist, it was just thinking about himself, about the way he wanted to make shit ton of money, and that's exactly what's going to happen. It's going to make himself richer, it's going to make the rich guys richer, definitely will happen, but in the short term, and then obviously the Chinese will retaliate. So it's just a matter of time, and that's the thing I'm trading. Looking at the moment the dollar will fail, because that's a, like I said, a 4-pillar structure. You do have a negative trade balance, and it's not going to change because you're selling services, but you do consume a shit tons of goods, and most of those goods are just coming from China, whether you like it or not. They having the power because they're producing what you guys are consuming. So it is not going to change. I mean, you're not going to reverse a trade balance unless you guys are building your goddamn phones at home, but they're not going to be priced the same amount. So you want an iPhone US build, it's not definitely not going to cost $1,000, but most likely double. So anyway, that's how it goes, all right? That's how it is. You don't like China, but China is building everything you use in a day-to-day basis, so they have the power whether you like it or not. Then the bonds problem, all right? The T-bonds. So just have a look at the broad picture on T-bonds, all right? So the problem is when you'll have stocks and dollar, no, it is not. So the stocks movement comes out of this. What has been pushing prices higher? So let's just figure out what we can remove out here. Definitely bunds are not necessary, so let's use the SPX in here instead. Alright, so you'll have a broad picture of what's going on. Alright, so the stock market is going up recently for one reason, mostly one reason, is because the T-bonds have been going up. Alright, so bond market's going up as the stock market has been. Alright, as in between, the dollar was mostly flat. All right, we've been rising first and then flat. So the problem is, you see the picture in here, all right, T-bonds are now reversing, dollar is about to as well. We've got nasty bearish engulfing in here, that's the second in a row, and I don't nearly think this one's going to be reversed. It's hard to say, all right, once again, dollar is the last pillar that needs to fall apart. So when the dollar goes down, and it's hard to say when or if, but if it happens, at the moment it will, you're fucked. Because the T-bonds in here, if you ever think they're going to be rising again, no they won't. They're probably going to go lower because people are going to ask for safe haven. So prices were probably going to have to problematically go down in here. It's the problem because what you have in here is that people will ask for a safe haven, but if Chinese decide to sell, that's what's going to happen. Negative T-bonds, pricing, okay, prices going down, dollar going down, you know how it ends. All right, there's only one direction for this. If Chinese want the US stock market down, this is what happens. Sorry, this is not a straight line, but this is what happens. If you've got negative dollar, all right, and the negative bonds, you're definitely going the same trend channel out of stock prices. And the stock channel is pretty fucking low in here. So you're thinking Trump has it under control. It doesn't. And like I said, the fourth pillar is timing, and definitely the timing wasn't playing along Chinese lately, and Trump has been exploiting this, and once again, I'm not saying he's just done just a bad job. He's been doing a great job at some point, but now the problem is it doesn't have the keys anymore. It's not handling those keys. Now the Chinese does, because Trump has an election so sooner or later, and everyone knows Trump think about the stock market to be his re-election purpose. So he knows if the stock market goes down, it's not going to be re-elected. So he does everything he can to hold the stock market, which means he's no longer doing political action, he's doing stock market action to just... so it's like political and stock market are just linked right now in a dangerous manner. So how do you think the Chinese... what do you think the Chinese are going to get to attack if they want to put Trump down? They're definitely going to attack the stock market. How they're going to do this? Simply the way I said. It's a matter of timing. You wait for a bad news, you sell the T-bonds, you put down the dollar, it gets credit negative, and everything goes down. They have 6.4% growth, and they're not going to go lower than that. It's nearly recession when they're doing 6% growth. So whether you like it or not, they're going to still producing the shits you buy. So any fucking way, even if you go down, you'll still buy Chinese stuff, which means any fucking way, they'll still have 6% growth. That's the big problem. You really think you have it under control, but you don't. These guys are 5 billion humans. They're buying shit at half the price you guys can do in the US, whether they do it in terrible conditions. And I stand on this. I'm not saying that China is a good place to live. Definitely not. There is a shit tons of things that doesn't work well in that country, and it's dangerous, though. I stand for this. But still, if you think the US are first, and the US will safely get out of here by putting everyone else's down, no, it's not going to happen. Because the Chinese have a dangerous crawl on the US, and they have a hook on your economy. They can bring you down any second they want. So that's the big problem. You think you have it under control, you don't. You absolutely don't. These guys have you under control for a long time already. They're playing with you, and they will put you down when they think it's necessary to do so. What you're going to lose in between is what they wanted you to lose in the first place, but you've got nothing and not a single way to fight that. They want the international dollar to step down, and they will put it down at the moment. So it is just, they're waiting for the actual good timing to process. Obviously, as closer as we'll get to the election, the US election, Trump will do even more mistake. It will show nervosity. It will make some mistakes. By the time it will make a mistake, they'll be there, and you can be damn sure they're probably going to be selling T-bonds and making sure that the dollar goes down in the same time. So they may just be waiting for the dollar to go down. They may just be waiting for this. They're probably seeing the European US problem as a good opportunity. Anytime Trump will retaliate to Euro area and will start putting tariffs one to each other, definitely what you think is going to happen. Euro dollar is going to rise. We're definitely going to be like that because you're going to bet against euro, so you're definitely going to put the dollar down, and you're just going to dig your own grave. It's simple as that. You're going to put the dollar down, and at the moment Chinese will start selling. We'll have probably an European-China deal, and you'll be left alone with a bearish dollar, bearish bond market, and a falling knife stock market that you only guys own. Because that's the big problem. Right now, who's owning the stock market in the US? Mostly the US citizens. So that's the big problem. You guys haven't been diversifying because you've been listening to the Trump's bullshit. So what did you do? You thought Europe is shit. You thought China is a bullshitty, crazy country. So you're not going to invest in China. No, you're not going to invest in the euro. The euro is falling apart. The European Union is going to split. So you have a very bad vision about the euro area, a very bad vision about China. So where do you put your money? At home. You just invest in the US. That's great. That's what we call authoricism. I don't know if this word exists in English, but you guys see just all for yourself. How do you call that? It's a bubble. That's the most dangerous in the asset right now, in the US assets right now, is that it's mostly owned by US citizens who have a very narrow vision of multilateral economy that we actually live in. So you guys are living in bubble. You think the stock market is so strong because it looks strong, but you're printing prices that has absolutely no value until you sell your stocks. You're going to sell your stocks to get dollars, but the dollar is going to weaken. So what you're going to do is that you're going to sell your dollars for something else, probably gold or anything like that. Who's owning gold? The Chinese? Who's going to have I mean, the currencies will be just a massive mess, but mostly the dollar will be the big loser. So you're just going to one thing. You just want to sell your stocks to buy something else which is not stamped in dollar. So how do you even think the capital will not just bleed like shit out of the US in that perspective? So I'm not saying this will happen. I'm just giving you a scenario that is very likely possible. So the thing is, that's what trading is about. Not saying this will happen or this will happen, but this can happen and this can happen. And just making sure that you're pretty well balanced between all the possibilities you have. So the thing is that US being fully invested in US stocks right now is a huge danger, a huge bubble, and definitely something I don't want to be into. So that's the reason why I'm starting looking at some selling in the US, but still, can they go higher? Definitely they can. You guys are controlling your own prices, but your own prices are just Trump's toys. Because he wants them to go higher, it can manage to do this. But the elections are 1 year ahead, and definitely it's not going to hold for a year. It's not even possible. So the thing is that, yes, everything is fine right now because probably the worst is to come. And that's the worst case scenario. When you get from euphoric to panic is where you get the strongest currency, not currency, but money destruction. All right, but money can take multiple aspects. It can be stocks are money. It can be bonds are money. It can be just money, you hold some dollars. So the problem is we're probably going to destroy dollar valuations in the future because you guys are in a dangerous bubble. But the thing is that you don't see this coming. That's the reason of a bubble. If you see this one coming, that is not a bubble. It's just exactly as the guys who were buying bitcoins back then. They thought this will go higher because it had to go higher. Now, put it straightforward. How do you even think the U.S. consumers are thinking right now? They're thinking everything's great. They're thinking Trump's doing a good job. They're thinking U.S. stocks are the strongest, so they should be investing into U.S. stocks and not others. Others are bullshit. We're just, the strong is in here. This is where the money is. Yes, that's exactly what we call a bubble. So I hope, by doing this, I'm not saying this will obviously be a carnage for U.S. Investors. All I'm saying in here is that if you jump on this with both feet, then you're just jumping into a dangerous bubble. So all I can tell right now is that buying U.S. stocks kind of makes sense, but first of all, buy U.S. stocks that matters, not the bullshit that everyone is trying to get. Most likely get some General Electrics or safe haven assets that will, if things goes wrong, these things won't lose half their value. That's the thing. So put your money where it actually makes sense, not where people are, not where everybody is just going. Because if you do this, this is where definitely the most amounts of money will be destroyed afterwards. So don't trade what people are talking about. The more they talk about, the worse it will be in the end if something ugly happens. I'm not saying something will happen. All I'm saying, if it happens, you don't want to be there. Secondly, diversify the portfolio as much as possible. If you want to be in stocks, then be sure you're at everywhere in the world fucking stocks, including China. And if you think China is the nasty little brother, and if you think Europe is just about to destroy itself, then even if you think that, put some money in there because you have to. If you don't, if you put it all in the US, you're just in a dangerous narrow vision bubble. And if it bursts, you're just going to lose it all. Not lose it all, but this is where you're going to lose the most of your money. Because if you have it all in the same place, and if that place ends up collapsing, then you just be in the first line. And that's the worst case scenario. All right, so that's the swing scenario to me. I'm just waiting for the dollar to show some weakness signs, and definitely has been happening last week. I would like to have a confirmation sooner or later. We do have a double top, which means in here there will be no support in this area, and we're probably going to fall a shit. So, and when we are there, like I said, you better hope and brace yourself for the T-bonds not to be sold, because if you see them falling in the same time, there is not a chance the stock market isn't falling shit in the same time as well. All right, and if we do this, simply means whatever you've been putting in the dollar is going to lose valuation, lose value. Because don't misunderstand that price is very, very different from value. What you care about is what you own worth. What it's worth. What is the value of this? All right? So the value of an asset is what you get by selling it. So if you think everything's fine because everybody is buying some dollar stamped stuff, then it's great, as long as people do. When people will stop doing it, then some people will ask out, will ask money, or anything else than money, something that has value. When they will, then now, and at that moment, we'll see how it's worth. We'll see how much that's worth. We'll see what the price is. That's the problem. All right, don't misunderstand value and price. These are really two different things, and US are printing prices right now, but definitely not the value. The value is pretty different, and I bet you don't put everything stamped in dollar, because dollar may lose a shit ton of value, and all the dollar assets will as well. All right, I stand on this. That's the elements I see from the long-term charts. I see huge dangers regarding dollar. That's mostly the reason why it's attracting a shit ton of capital right now. So in a short-term perspective, buying in dollar makes sense because it's a short-term scenario. It's like bringing in the money to destroy it even further later on. So If you have mid-term to long-term visions, getting your goddamn money into dollar isn't even making sense to me, because it's really where I think the worst is to come. But instead, if you diversify, you're probably going to get safer. All right, just diversify, avoid stocks, and especially the U.S. stocks, for a couple years, a couple months, let's say 4 to 6 quarters, and just wait for prices to go down. Either nothing happens, and that's great, everything works fine, Trump stops to see narrow vision stuff, stops retaliating at Chinese and everything like that, and the world just put up in a good place altogether, which means we all together get back to growth, and and everything is fine, and I'm fine with that. I would definitely like that. Second option. And like I said, the risk-taking shows up, the black swan starts to burst, and the worst is to come. And definitely the U.S. is where the money is going to be destroyed, because everyone else has been pricing it in. All right, just have a look at this chart, and you'll definitely see it. All right, where do you think the worst is possible? FTSE, what do you want to destroy in here? The long-term supports are 30% lower. All right, same thing goes for the Euro stocks. We crawl 30% lower, and we're definitely long-term supports, and we're not going to go any lower than that. All right. Look at the Nikkei. So there is a little bit more in here to lose, 40%, but in here there's a big problem with the currency as well. Shanghai, you really think they're going to go there? Yes, they can. That's a 35%, and we're done. All right. In Australia, there's definitely a lot to lose in here as well. 40% can be dropped without a single problem. As you can see, when it drops freaking sharply. All right. So don't misunderstand me. All right. We go up with the stairs, we go down with the elevators. So that's exactly it. Stairs, better hope there is no elevator coming along the way. All right, and now look at the U.S. stocks. I mean, the Russell is definitely where there is the most value to behold. Minus 40% in here, that's the buy. All right, but the problem is, broad stock market. This is where the problem shows up. We're going to have to wait for a 45% drop in here to expect having something reliable to buy. That's the problem. We're rising. You're rising, but you're dangerously rising, and you better hope that the pace is not going to stop. So do everything you can to hold this pace, but that's definitely not at retaliating China that you'll do so. All you're going to do is just putting the trade balance even further in Chinese favor. And they have all the cards. They have the gold. They have your goddamn bond market under control, so they can do whatever they want. So you can piss them off just a bit, but if you go too far, that's where the problems are. And I would say I'm betting more on the Chinese than I'm betting on the US for that reason. I think the US way of negotiating right now is a little bit dangerous, and if you want to buy something, at least buy cheap. I mean, that's what's been happening in here. It was pretty fucking cheap in the US, in China. But is it already done? Is it already the bottom? That's possible, but I still tend to believe, even if it is, this is not where I want to buy. All right? Because in here, you're taking some risk. Definitely the targets might be interesting. All right? You can have interesting targets in here, and that's funny. I haven't even seen that. But today, all right, out of this, we do have a target in the fucking US at 330 fucking 3,300 on the SPX. Oh my fucking god. So that's a bullish breakout target after showing a negative signal. So that's the first time I've ever seen this. So this week is definitely going to be interesting in the stock market, because this candle is closed. So if we're heading toward this target, then oh my god, yes, definitely I'll be right to get the fuck out of SPX. All right. So that's a possibility. Like I said, I never said it's all about dark clouds and very shadowy future ahead of the U.S. All I said is that all I've been telling you in here is a story that is very likely going to happen as well. So these are the two major visions of the future. But if you think there is just one possibility and you need to be fully invested in this one, I say be aware that there is other options in here that are very likely going to happen as well. And if you don't price them in, then you're just avoiding risk, and you better brace yourself if the risk is ever showing up. All right? So don't put it all in the US. That's basically the message today. That doesn't mean the US will necessarily collapse, but if it is, as we've seen, this is where we're going to destroy most of the value, because there is a 40 to 50% drop to come out of US sectors. But still, is it going to happen? I don't know. Do I think it will happen? I have to choose a scenario. I definitely choose this one. I can be wrong. And if I'm wrong, then this is where we're going. 3,300. And if we go there, you definitely don't want to hold selling entries. I'm clear. I'm really crystal clear in here. If you think that this is obviously what's going to happen, then you're just as stupid as everybody thinking that the stock market will behave just great in the US. You never do that, all right? You always trade regarding the risk. You put yourself ahead of a scenario. You bet on one scenario. You account the risk of the opposite scenario to show up, and you just got them manage the risk. Because you never know. The market will choose one or the other, and before taking an actual decision, the market may be acting chaos, which means it can prove you wrong for a bit before proving you right. That's why you put a large stop loss, because the harder it is in terms of technical odds, the broader the stop loss must be. I tried to be as broad as possible in the US. I got proven wrong as they took my stop loss last week. But do I change any fucking thing? No, I don't. All right? So that's the lesson for the week to come. Watching out for the dollar. Watching out for the bond market, the T-bills. And I'm just waiting for the distortions to stop playing. As you can see right now, and I stand on this, the big problem is this. All right? The US sectors were showing some dangerous signs in here. So we obviously have technology, a straight line, nobody's even questioning this, even though, and I stand, okay, this sector is where the big problems are, right? Because on a year-to-year basis, let's take 1 year date, all right, we're expecting 10% down on revenues for technological sector. And that doesn't even ring a bell. Because this is what we have, all right? Let's put it per percentage, all right? So on a year-to-year basis, let's go. We're really year-to-year, all right? We're 15% up. We do have 10% negative expectations in here, so which means we're 25% higher in terms of prices that way we should be. So it's not exactly this, because you cannot add 15 to 10%, but basically you say, okay, this minus 10% is in here, all right? So where we should be is here, all right? So it is exactly 22% lower. So we do have a potential to lose 22% out of the tech sector, which is obviously a major component in the US indices. All right, sorry. So this is the big problem, all right? Consumers discretionary as well is a sector we expect negatively returning for the quarter ahead. So the thing is, where we expect the worst, we're pricing in the best, which is a huge problem, because that's exactly a dangerous bet. That's what we call, all right? It means the US investors, or whoever is buying this, because I don't nearly even think this is investors' behavior in here, but whoever is doing this is just betting that the worst will be the best. They better have to be. Because all those things, the Microsofts, all right, oh no, sorry, I'm not going to go. Let's go back in here. So, the Microsofts, all right, the Ciscos, all of this, just look how bright they are. Straight line bubbles, everything like that. Just let's zoom out. You'll see this more clearly. This is a big, nasty bubble. What stages are we at the bubble? We've had the volatility pullback. Now we're straight lining, which means the next time is the bubble bursting. Just look at all those names. I mean, this. Just look at the goddamn Apple as well. Apple as a consumer discretionary, it's probably not gonna be great. All right. So the problem is, what we have right now is huge dangers on some valuations, and they better have to sustain the momentum, because the moment they fail, the actual value is way lower than the prices we're printing right now. So that's the big danger. All right. Everybody's buying those stocks. Everybody is fully ETF leveraged on those stocks. Let's just have a look at the goddamn ETF sector once again, and you'll see how beautiful this is. Where are we? All right, here we are. Just look at that. How beautiful this is. This is exactly what I was expecting back then. The US are playing bold game. They're breaking resistances in here. They're doing anything they can to avoid problems. That's exactly what you shouldn't have done. That's exactly the problem. What you do in here is that you just open the door for the Chinese to fuck you up in the same time. What they will do is attack each and every angle and you'll have nowhere else to go. That's the big problem. You're taking shit tons of risk and you better hope that everything is going to play according to your plan. But that's forgetting about the goddamn Chinese. You forgot about them. You're just putting a shit ton of pressure on them. And you think they're going to be playing like friends right now? Do you really think that? Trump has been acting like a bold asshole to Chinese delegations. So you don't play good cop, bad cop, all right? What it is that now you better hope that you didn't piss off the Chinese, because if you did, they're going to wait for the actual timing to put you down the ground, and they will attack from each and every fucking angle. So what they know is that if they put the dollar down, and if they put the bond market down, you're going to have systematic problems, which means almost instantly all of this is going to act like a big fucking mess. They know how to trigger this. It is really simple at the moment. The question is, when will they pull the trigger? All right? Don't force them to. You better have to sign a deal with China. And even signing that deal doesn't really mean it's over. It definitely doesn't mean that. All right? So be aware of it. Signing the deal and how long it takes is not a good news. That simply means China made me just playing you around. And as closer as you'll get from the election, Trump will get even more nervous. It will do even more stupid actions. And if it ever end up fucking up with the Chinese, they can press the button any fucking time and brings you down. I think they're just waiting for the dollar to show up negative results, and it's already on motion. So the dollar is starting to show some weaknesses. Anytime it does, they will be ready to press the button at any time. What is that button? Like I said, they're holding the gold. So they have your safe haven. You cannot hide. You cannot just turn your money into gold for the time being of the recession. So all you have to do is suffer some huge losses in valuation in the dollar, and they just look at you getting crazy. Because no matter what the Trump administration will try doing, it will be too late. People will just see this one coming. They'll see their asset losing shit tons of value. So what they'll do is they'll ask out. And when they'll ask out, they'll see the dollar falling like shit, which means they'll change their dollar into something else. Either it's going to be buying gold that the Chinese owns, so they're going to even more devaluate the dollar. Or what are they going to buy? Just imagine this. You have shit tons of stocks. Lots of your money, of your savings are into US stocks. When you manage to sell them with losses, then the dollar starts losing money as well. So you need to change your dollar to just avoid losing your assets. That's exactly the worst case scenario. So like I said, I'm hoping it's not going to happen, because if the US are going down, then the future is not bright. But admit that this is very likely. I mean, the scenario I just showed up is possible, and not just possible. It is, if you piss off the Chinese, that's what they're going to do. They don't really give a shit about the US. You're just consumers to them. But they have Europe as well, so we can sign a deal with China and just fuck up US. You guys thinking you were so important, you're not. You're just money. That's what you are. The US is just services. You guys have Googles. You guys have things like that. But now, let's be honest. The Chinese are most likely copying you for a long time. So are you that necessary for the world? I don't really think you are. Your money is necessary, and if the Chinese decided to put you down, then oh my God, necessarily, like I said, I wouldn't really like that kind of world, but I think it's plausible. So don't bet it all on dollar. All right, that's the actual purpose on today's show. So I'll stop in here. But just to be honest, this has always been inspired by this, all right? So I need credits to give credits to this, because I think this article is really important. As you can see, it's not showing up from stupid bearish guys, it's from Barons. And the guy in here just put it exactly what I've been saying. I've just been dipping a lot more deeper into this. But that's the thing, it's basically saying this guy has been living the 5 greatest recession lately, and what he fears right now is that everybody sees a bubble, but as he says that the bubble is not necessarily where people think it is. He thinks the bubble is just the US actors right now thinking on their own and thinking that US is great alone, but it isn't working this way. So this is where the bubble is. The bubble is definitely in the US and in the broad US sector. So the bubble is the SPX on itself. So you better, if you are in there, no problem with that, because bubble always starts by attracting money before bursting. But all you need to be sure of is that if it bursts, it might be unexpected, so you must have plan Bs, and moreover, you need to be diversified. That's my key element in here, all right? So if you buy US, just avoid buying the goddamn tech stocks and putting it all in them. You know how dangerous this is.